Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we just had a massive impulse to the upside, which rejected a quite strong historical structure level. In fact, what we can notice is that this zone was acting for quite a few years, first as previous resistance from which all these rejections to the downside were created, and then the market broke above the zone with this impulse. Now, what we know is that previous resistance, once it is broken to the upside, becomes support. And the market, in fact, then tested the previous resistance turn support and is currently in the process of rejecting it to the upside. However, what we know is that no market can just go up in a straight line without ever providing any kind of corrections. Every healthy uptrend is supposed to be created by a series of impulses and corrections. So along the way, the market is supposed to create a series of higher highs and at the same time a series of higher lows. This means that in a situation like this, the next logical step would be for the market first to provide a correction and then to print more potential bullish continuation. So from a monthly standpoint, there is definitely the possibility of seeing first a bit more of bearish price action being created and then the continuation to the upside. We can also notice that since we just have an impulse and now the start of a correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have a 0.32 retracement currently lining up exactly this area, which we could in fact expect this market to want to correct to and then to reject to the upside. So there is space for a bit more bearish continuation here if we look at this market from a monthly standpoint. We can also notice if we look here at the last candle that the market just printed from a monthly perspective, we can notice how we have a red candle with a very long wick. Usually when there is a candle like this, the next candle is supposed to at least try to fill in the wick, because if you have a candle like this on the monthly, it simply means that on lower time frames, like for example the weekly or the daily, you will have an impulse and a correction in which the correction is exactly the wick that we see here from a monthly perspective. Now let's keep all of this in mind and drop down on the weekly time frame. Now here on the weekly, we can notice how the market first had created this M pattern, then completed the M pattern, and now is trying to reject to the downside. We can also notice that the market currently is slightly pushing to the downside, but it has some support all across this level. In fact, from here, this is exactly where the previous push to the upside actually started. So we have to keep in mind that there is the possibility to see a bit more bearish price action, but here the market is supposed to find some support. Let's drop down on the daily time frame and see what we have. Now, from a daily perspective, the situation is quite clear. I also spoke about gold just a few days ago. When the market was around this area, I explained all the reasons for which we could expect a potential rejection to the upside. And in fact, that is exactly what the market did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, at the moment, what do we have? Now, before we dig into more details into what we have here from a technical perspective on the daily, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing precisely on gold. And what we can see here is that with the last reports, net positions have been massively decreased. We went from having 296.2k net positions all the way down to 234.3k net positions. So we had a clear decrease of the net positions, showing how institutions have been moving back to the bearish side for gold, therefore making it weaker. And a weakening gold, from an institutional perspective, is supposed to also reflect in the price action of gold, because if institutions essentially start moving to the bearish side, or even only they start taking profits on their longs, that is selling pressure that could definitely make gold weaker. And in fact, we can see that taking profits from an institutional perspective is exactly what is happening here with this decrease of net positions, because institutions have decreased their longs from 387k all the way down to 309k, therefore making gold weaker. So in a situation like this, especially if institutions will continue this profit taking or even start to add shorts, there is an increased probability of having more bearish price action being created from here. Now, from a technical perspective, what we can notice is that this area is resistance. From here, this previous push to the upside started, then the market broke below that zone, and what we know is that previous support, once it is broken to the downside, it becomes a resistance. So as we have resistance at this level, if institutions will continue to close their longs or even add shorts, that would increase the probabilities of a potential push lower. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market at that point, I wouldn't be surprised to see a potential rejection to the downside, rejecting this confluence of resistance, and for the market to provide a deeper correction that the monthly time frame seems to be suggesting. That definitely wouldn't surprise me. Now, all this general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg. In fact, if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website. Here, you can gain access to all my courses, so 26 plus sessions of courses that go from the very basics of becoming confident with charts to all the way to building automated trading algorithms using the MQL4 language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer to build and optimize those portfolios of strategies. So a lot of very interesting stuff that you really cannot afford to miss. You also have the possibility to gain access to the Trading Station software with Telegram notification integrations to really accelerate your learning and you're becoming confident with charts. You have the possibility to gain access to one-on-one private mentoring directly with me from your student dashboard, as well as the COT data software. And you also have the possibility as a student, this is only for already members, to gain access completely for free to my MT4 EA's algorithms for free again. And here, in fact, you can see that there is all the presentations of my algorithms. And if you continue to scroll down on the website, you will see that you have the possibility to gain automatically access with the email and password that you will create during the sign-up process. So definitely looking forward to see you on board and see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.